Good morning. This is Edwin Hindam speaking from eastern part of Indonesia. The Financial Accounting 6050 with the topic Comprehensive Financial Analysis Report. Greetings. Good day, and thank you for the opportunity to me to present this financial analysis. Today I will walk you through a comprehensive 3-year financial review of Microsoft Corporation covering fiscal year 2023 through 2025. This analysis evaluates Microsoft financial performance, balance sheet strength, and the impact of its international operations, while also demonstrating how artificial intelligence tools were leveraged to deepen insight and improve clarity consistent with modern professional finance practice. I will conclude with strategic insight and recommendation present as if briefing executive leadership. Section 1. Microsoft is one of the world's largest multinational technology companies, with operations spanning more than 190 countries. Its business is organized into three major segments: productivity and business process, entailing cloud, more personal computing. Microsoft was selected for this analysis for three reasons. First, it generated nearly half of its revenue outside the United States, making it an ideal case for international financial analysis. Second, its financial disclosures are exceptionally transparent and consistent, enabling accurate multi-years and cross-company comparisons. Third, Microsoft sits at the center of major structural growth themes: cloud computing, artificial intelligence, enterprise digital transformation, making its financial trends highly relevant to modern strategic decision making. Section 2. Historical performance analysis. Revenue trends. Let's begin with the revenue performance over 3 years. 2023 revenue was approximately $212 billion. 2024 increased to about $245 billion, and 2025 reached $281.7 billion. This represents consistent double-digit growth, average roughly 15% per year. Importantly, this growth was broad-based, not driven by a single product in line. Cloud service, enterprise subscription, and all enabled offering were key contribution. Cost structure and operating leverage. As revenue expanded, Microsoft costs also increased, but at a slow rate. Investment in data center, artificial intelligence infrastructure, and R&D push costs higher, yet operating expense scale efficiently. This demonstrates strong operating leverage, hallmark of high-quality software and platform business. Section 2. Historical performance analysis. Profitability trends. Profitability tells an even stronger story. Over the 3 years period, operating income rose from approximately $83 billion to $128.5 billion. Operating margin expanded from about 39% to 46%. Despite heavy reinvestment in growth, margin continued to improve, reflecting high margin recurring revenue, economies of scale, efficiency, cost control. In short, Microsoft is growing faster than its cost, which is ideal from a long-term value creation perspective. Section 3, Financial Position and Health. Liquidity analysis. Moving to the balance sheet, Microsoft liquidity position is exceptionally strong across the 3 years period. Current ratio remains near 1.8, quick ratio still comfortably above 1.5. This figure indicates Microsoft can easily meet short-term obligations without reliance on external financing, solvency, and leverage. From a solvency perspective, Microsoft employs moderate and disciplined leverage. Debt to equity ratio remains around 0.5, while interest cover exceeded 30 times, meaning interest expense presents virtually of financial strain. When benchmarked against peers such as Apple, Microsoft maintain high quality, useless financial leverage. This conservative capital structure enhances resilience, especially during period of market of currency volatility. Overall financial health taken together, Microsoft balance sheet can be described as four trees like strong liquidity, low default risk, significant flexibility for global expansion, acquisition, shareholder return. This balance sheet strength is particularly important given Microsoft's substantial international operation. Section 4, International Brand Analysis. Approximately 49% of Microsoft revenue is generated outside the United States, making foreign operations central to overall performance. Currency translation effect. Microsoft report financial in US dollar. Revenue earned in foreign currency must be translated back into US dollar. When US dollar strength, report international revenue appears lower. Operating income may decline even if local currency sales remain strong. Conversely, a weaker dollar inflates report result. Importantly, this represents mostly translation risk, not operational weakness. FX risk management. Microsoft actively manage currency exposure using forward contract, currency option, cash flow, and net investment hedge. These tools help stabilize short-term earnings, though they cannot eliminate long-term currency exposure entirely. Section 4, International Operational Analysis. Accounting Standards Consideration. Microsoft report under US GAAP, while many global competitors report under IFRS. Difference in revenue recognition, asset capitalization, impairment testing can affect company across international peers. Analysts must account for this difference when benchmarking performance globally. Section 5, Artificial Intelligence Enhanced Analysis. An important component of this project was the integration of artificial intelligence tools to support analysis. Scenario modeling. Artificial intelligence was used to model scenarios such as 10% appreciation of US dollar result shown. Report revenue could decline by approximately 4 to 5%, operating income could fall 3 to 4%. However, Microsoft's economic fundamentals remain intact due to diversification and hedging, trend interpretation, and visualization. Artificial intelligence tools accelerate the trend detection across financial statements, draft interpretation of ratios and margin, enhance of chart and dashboard for executive audience. Importantly, artificial intelligence did not replace human judgment. All conclusions were validated using traditional financial analysis. Section 6, Key Insight and Strategy Recommendation. Based on this analysis, several conclusions start out. Key insight. Microsoft demonstrates sustained high-quality growth, operating leverage drives expanding margin, balance sheet strength provide exceptional flexibility, international exposure helps grow while remaining well managed. Strategic recommendation. First, Microsoft should continue prioritizing cloud and artificial intelligence investment, which deliver both growth and margin expansion. Second, maintain conservative leverage to result against global economic and currency risk. Third, continue enhance of FX risk and management will remain crucial given international scale. Conclusion. In conclusion, Microsoft exhibits one of the strongest financial profiles among global multinational corporations. Its combination of growth, profitability, balance sheet strength, and disciplined international risk management position it well for long-term value creation. Thank you very much for your time.